All right, so today we're going to look on Snap-on, so a business that sells a whole range of tools. Very boring company, not one you'd think for dividend investing, but they support multiple different industries. So scrolling down here, you've got the automotive sector, aviation and aerospace, agriculture, construction, medical device manufacturing, and even military and defense, as well as mining. So sure you can understand like the level of tools and construction that those industries would actually need, and all the maintenance that goes with that. So I think Snap-on provides a lot of that assistance to those industries. So here are some of the product categories that you're going to see. So tool storage, hand tools, power tools, diagnostic equipment, and all that other sort of stuff as well. All right, so what I'm more sort of concerned about is the dividend yield and how safe that dividend yield is. Because I'm a dividend investor, I look a lot on YouTube about what other dividend investors are doing, and Snap-on was another company that competed with SCHD in terms of the 5-year growth rate and how much they're actually growing their dividend. So the dividend yield, it's got a good healthy starting dividend yield of 2.53% with an annual payout of $6.48. And this is the 5-year growth rate, which is what everyone sort of really wants to know about for their dividend companies. 14.72% is what they're averaging to increase their dividend every single year, and they've been growing their dividend for 13 years straight. Okay, so the amount is $1.62 every single year, and they pay quarterly. Moving on to the dividend history. Okay, so what's good about this? So they've been paying a dividend consistently for 33 years. But the last 13 years, they've been growing that quite significantly, and we'll get into that as we scroll down here. So let's go back to the 10-year performance. So what you've got is every quarter, like a nice steady dividend payment, very consistent, and then every single year, they've just been growing that. And you can see that trajectory, that's very consistent, very stable, and it's growing at like a rapid rate, which is what we want as dividend investors. Now, moving over to the dividend growth, let's look at the 10-year period. Now, that's extremely comforting just to see that that trajectory and how that dividend is going every single year. So this is the annual sort of look. But if we look back at 2013, they paid an annual dividend of $1.58. Now, let's fast forward to 2018. They're now paying $3.41. So in 5 years, they've doubled their dividend. And if you look from 2018 to 2022, they've got one more year and they'll be doubling their dividend yet again. So they're on track to every 5 years doubling their dividend. But scrolling down here, you've got, in 2014, they increased their dividend by 17%. The next year, 18%, 15%, and then fast forward all the way to 2022, right, 15%. And later on, we're going to have a look at the revenue on the balance sheet. And I have a very good suspicion that those guys will increase their dividend yet again in 2023 at a minimum of 15%. So here we are with macro trends, and we're looking at the income statement. All right, so as you can see here, like with the revenues over time, you can see 3.6 billion, 3.7, 3.7, 3.5, 4.2, 4.4 billion. So you can see like nice dividend growth here, and there's the not dividend growth, the revenue growth, and then here's the the graph performance. So it's still looking very good as you see it there. But moving over down to the gross profit as well. So let's have a look at the graph there, and you can see it falls in line with the revenue. Okay, they've had like a nice trajectory up from 2013 to 2019, and then they've sort of gone down a little bit due to the pandemic, etc. And now they've gone back up, and the trajectory is looking very good there. Coming down, looking at the net income over the last few years, and it's tracking a little bit just like the revenue and the gross profit there. Earnings per share, nice trajectory at the same time. So this company is looking very good. The financials seem very stable, and they're growing as a business. All right, let's just have a quick little look at the cash on hand here. So from 2013 to 2019, not that much. And then from 2020 onwards, it's just skyrocketed, which is good to see. And coming down to the assets, they've got just under $7 billion worth of assets, and that's growing rapidly. But when you look at the liabilities, it's not even like a third of what their assets are. So that's very good, very strong sort of looking balance sheet for Snap-on as well there. All right, so this is how the stock price has been trading in the last sort of 3 years. All right, you've seen, in 2021, just a little bit of a drop there. You've had like a massive acceleration early on, and now it's sort of just flattened out. But if you're really here for the dividend, those sort of metrics won't really matter as long as their balance sheet remains strong and the revenue's increasing and their gross margins and profits are increasing. That's what we really only care about as dividend investors. So far the company's looking pretty damn strong. So yeah, well, I mean that basically concludes the video. But if you want to comment if you own Snap-on, or is there any other companies that have that 5-year compound annual growth rate of 14+% that actually compete with SCHD. There's very few companies that actually do so. So to be interested to see like what other companies that are out there that actually grow their dividends so much. I might actually look into buy this company within the next couple of weeks. But just depending if I actually want to add another company, which would just mean more diversification, which I don't necessarily want to do. So that's just something I'll be thinking about over the next couple of weeks. But that concludes the video. Thanks for watching. Give it a like, subscribe to the channel if you like the content, and I'll catch you next time.